In today's video, I'm going to be showing you guys exactly how to understand institutional order flow and how to capitalize on it in order to catch high probability risk to reward moves. So starting off as always on the path, just to give you the concept of it first and foremost, and we just want to understand that our institutional order flow simply just means our external swing points. That is the points in the market which is outside of all of the inside noise. Now, there are multiple different types of structure. And so, of course, inside of these institutional swings, you have the inside moves. And that is what we call our internal structure, right? You have this right here, and then you have that switch where internal shifts bearish in alignment with order flow. Then you have another shift where internal shifts bullish, but really what that actually is just the institutional order flow swing points pulling back to collect more orders, and then they realign and continue to take out the lows. And then of course within that you also have minor structure, which for this episode isn't so important. So we're going to go ahead now into the charts, and I'm going to show you how to understand this from a chart perspective and how to capitalize on it. So here we are on GU 4-hour time frame. 4-hour time frame is typically what we use to understand our overall institutional order flow. We can understand that these highs have been taken out right here, low, the swing point, right? What is this swing point that caused it? It's this swing low right here, right? This high puts in a low. Then you have an internal structure shift bullish, which means the order flow is pulling back. It puts in a new low, a new high, granted with a wick, which is a weak move, and then we take out the lows. So once these lows get broken, that is our institutional order flow shift. This is where we understand the institutions have now, or the algorithm that operates the market, which we call institutions, have now shifted their intention, shall we say, to operate to the lower timeframes. So we can see the low that's being put in here. However, on the way down, we understand that the internal structure is bearish, and then we have a break of structure. Now, when the internal structure has a break of structure opposite the order flow, that simply means that the order flow is pulling back to collect orders. You have to just simply await the realignment, which happens right here. Let's zoom in and take a closer look into what that means, right? We can see now that this low has put in this high, and we have our level of demand, which simply put is our last point of institutional orders coming into the market in this wick, which is our sell to buy that puts in the high. When this gets broken, which is broken here, that is our change of character. Now, the overall supply range which causes this change of character is right here, right? Anyone who's watched our videos on how to identify correct supply and demand zones will understand. What do we have just before the level? As always, we have liquidity. We have a double top, which is more liquidity. Now, there's a specific reason in which you can select this zone, because this is the high, look, right? Internal. Low puts in a high, reacts, high, off. So this right here is the high that caused the low that broke the demand that put in the high, so that order flow can realign and take out our low down here. Because when you zoom out, it's very simple to just understand, okay, well, we've had a change, we've had a break of structure, we've pulled back, we've realigned, which means internal has aligned with external, and that's when we know we are going to be continuing in the direction that it is we want to be going in, and we can go ahead and take out our lows down here. And then we can understand, okay, now we've put in a new low, we've had a shift, which means we are pulling back, because as we pull back up to our level. We put in a high. Now you want to understand, okay, where did the change of character take place? From this high, where did we start aligning? Okay, so we go inside. We understand high to low, low to high, high to low, low to high. Break. Okay, here was the demand level already been mitigated. So where is the next demand level that hasn't been mitigated? This wick, right? Unmitigated. This is a buy to sell that's completely unmitigated, that is responsible for the shift internal to realign with the external. Then guess what we can expect? Now we can expect these lows to break, and which they do. And there is your second high probability, high risk to reward, higher time frame setup based purely on institutional order flow. Now, why are these two trades necessary? If we just take a look, we can understand the order flow shift when we broke the lows in here, which is a break of structure. So now we're expecting bearish order flow. And so it just is simply external order flow aligns. Look, we have a break of structure down, then internal structure is bullish on the way up, and then you have a realignment. This realignment is an internal shift known as a change of character, which leaves behind a level of supply. Because now what do we know? We know the internal is bearish and external is bearish. So now it's likely the external leg is going. And that's why we're able to take the shorts from the internal confirmation levels to take out the external lows. Internal confirmation levels, take out the swing lows, And that is how you trade higher time frame institutional order flow combined with lower time frame institutional order flow. And of course, combining it with liquidity and supply and demand. As you probably know by now, our strategy doesn't just consist of one aspect. It is order flow, the three different structure types, which are order flow, internal structure, and minor structure, because we understand fractals. Partner that with supply and demand, premium and discount, liquidity inducements. All of these things you put together, and that enables you to take executions like so, and even on the lower time frames, even still, to position yourselves in alignment with the institutional order flow. You don't want to ever trade against the institutions. You always want to trade in alignment with them. And that's exactly what it is we are intending to teach you to do here. So guys, do appreciate you guys for tuning into this video. If you did enjoy the video, do go ahead and smash that like button and subscribe to the channel. We do really appreciate every one of you guys that are subscribed over to the channel here. It's for you guys, the reason